swing trading music. All right, so I have to ask the audience, is it recording? Because, oh yeah, I have to look over there. Oh yeah, way over there. All right, it's recording. Nice, thank you everybody. Yeah, I guess two things I would advise if you build your home office. One, make it soundproof, and two, put a kitchen in it. Two best moves I've ever done. Instant coffee and loud. All right, so let's do some swing trading. Hopefully sounds all right. Hopefully charts all right. Looks like everything's okay. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk when you cannot afford to lose. So the interesting thing is, what, a week's gone by, yens have moved and everything else has moved. And one of the things I've been showing you is like building this kind of this little fun little portfolio, I guess you might want to call it. You can see everything's just averaged out, like nothing's changed, versus being all over the place with volatility in your portfolio. And that's one thing I'm trying to get you guys towards. So we will see some of the yen pairs came down, and I'm worried about that. So I don't know, like that, but it's been offset by gains other places. So in the long run, that's what you're striving for. All right. So anyways. So let's go through this. So I'll start on the yens, mostly because we said, based on seasonality and such, I'm worried about this time of year as far as, I don't know, I guess it's a race to take profit. And I'm worried that actually that's what's going on over the last few years. It seems every year, especially last year, the yen strength comes a little bit earlier and a little bit earlier each year. Now, last year it happened in October, but even though I was concerned about that, this October, last October, the yen gained strength more. That move that happened last year in October had more to do with the perception and the change at the Fed, which scared everybody, right? Because the Fed said, hey, man, we're going to jack up interest rates forever. Kind of like, really? And of course, we know, like literally 60 days later, they're like, no. And then, of course, shortly after that, they started cutting. So it was a really confusing mess last year. So luckily, that didn't happen this year. But another thing, going back even farther than a year ago, let's say over the last 5 years, it seems like there might always be a slightly earlier move in the yen strength. I don't know if there's any validity to that, but it's in the back of my mind. I'm worried about it. And that's if you knew everyone was going to take profit in December, wouldn't you take profit in November? And then if everyone knew everyone was going to take profit in November, you would take profit in October, right? And so I'm always worried about that, just slightly, not really. So anyways, long story short, as you know from the training course and previous conversations, around the third week of November, I start to sit up and take notice that in some years, profit taking occurs at the end of November. In better years, more happier years, people take profit in December. So I started to get nervous around the third week of November. Well, here it is with the second week of November. And sure enough, the yen is strong. So I don't know what to read into it any more than you do, except it happening was predictable. And the timing of it is unfortunate. So we don't know yet, is this the beginning of the full avalanche or not? Is it just, is it a snowball or is it an avalanche? I don't know. I never know. So this is a tough time. So welcome to reality, everybody. Welcome to reality. So in August, we were preparing to buy in the third week of August. In September, we were expecting a pullback and maybe even a double bottom, but to stay strong. In October, we figured it was going to open hot, meaning there'd be less of a pullback in October. And then, now that we're in November, the easy pips have been made, so to speak, right? So now we got to be a little more defensive, or at least open to being defensive, right? So maybe this is a counterattack kind of thing on the yen side. So anyways, let's try to put this together and see if we can get a coherent strategy. The bottom line is I would like all the yen pairs to continue going up till at least the Fed meeting, December 12th. That's what I would like. But we got to be careful. There's a difference between being consistent and then being dumb, right? Like giving all your profits back. So we need to be consistent, but we need to be real. So that's why I always start these meetings with this idea of like, where am I at psychologically? I think it's really important to be clear to yourself that you don't know, and that mistakes happen when you're certain, right? So I am not certain what's going to happen, except I am certain on what I would like to happen. And I need to see reality as much as possible. So I would still like to be a bull. I'm very concerned about the bears. I would love to get through November with a higher high, right? Because that gives me another 5 weeks of profit. But I need to be in tune that there's risks to that. So let's tiptoe through the charts. I'm still a bull on global macro. I'd love to buy dips. I'd love to buy dips at support, but like that Aussie doesn't look good to me. So we need to like pick and choose our battles here and pick and choose wisely. So like maybe another analogy that just occurred to me. Back in 2008, the stock market, or maybe it was more like 9, the stock market had finished its massive collapse. And from then, all you had to do was buy the S&P 500 and you'd be fine, right? And many people did. And all my friends I advise, like, don't pick stocks. It doesn't matter. The entire stock market's going up, and it's because the Fed is pumping that money into the market to increase asset prices. Well, what does that mean, increase asset prices? Push the stock market up, push the valuation of homes up. That's it. Make rich people richer. But there's a reason for that, because then it goes through the economy. So all you had to do was buy the stock market. It didn't really matter. Just buy the S&P 500. It's going to go up. Now we're in this market where if you were a stock trader, let's say, it comes down to, if you're going to beat the market, you have to be wise in what you buy, right? You need to be smart. You have to pick the right stocks. And that's really when hedge fund managers start to really outperform the market, when you can't just buy anything, right? Like if the entire market's going up, I just lost internet. Are you guys here?
Hey, Wayne, if you can hear us, it looks like you froze. Don't know if you can hear us or not.
All right, so you guys are back. That was the first time in 3 weeks, or not 3 weeks, 3 days that I lost internet. That's the first time my new internet connection dropped. So hopefully
You're
that's
okay,
not bad.
back.
Can you hear me though?
Yeah, sound great. Look great.
Okay, good, good. Are the charts back? No, you don't have charts. That was weird. That was the first time. I didn't expect that to
Negative
happen.
charts. Just chatting the video thing.
Okay, so that's back. It's funny, when I'm sharing the screen, that's when the little recording thing disappears for me. How interesting. Hang on. So you got video, you got my sound. I need the chat back.
Yeah, we got charts now.
Yeah, okay, I have to reset everything. All right, so I got your chat. Okay. That was weird. All right. But a whole bunch of people logged out, or what's happened now? Everyone else got kicked out? No. All right, cool. So, gee whiz, that was weird. I thought we were past all that. Okay, so we're all back. Okay, good. If not, jump in. All right. So what was I doing? Oh yeah, picking stocks, right? The value in a mature market, after the Fed is done just pumping free money into the market, the value of a hedge fund manager, the reason they can charge more money than just, charge any money, is that it's their job to actually do the research, find the right stocks, not any stock. The idea of like the rising tide raises all ships, right? Well, once the tides come in, which ship which boat's going to catch most fish. I don't know. It comes down to some sort of research. So we're kind of in that cycle right now as far as the seasonality is concerned. All the yen pairs went up. Well, that was our decision-making process back in August, right? Like, we're going to look to buy anything with a yen on it, and maybe everything with a Swissy on it. And we might stay away from that dollar this year because the Fed was cutting interest rates, and that increases the value of the dollar. Okay, so now we kind of we nailed it, right? All the yen pairs went up in September and October. And look at that October on this particular pair. Nailed it right at the top, right what we thought, like just worked out great. So now it's the idea like any yen pair going up is no longer valid. If we're going to keep buying, we have to be choosy. We have to be picky. We have to do our analysis. Which one will we consider buying and which one will we not consider buying? Now, as we go through November, if they all collapse, then look, we're done. We're done for that one big move, and we need to start preparing for 2020. If we can get some stabilization, I think we'll find the stabilization in the best of the yen pairs, and then the worst of the yen pairs will just stay out of, right? They won't all go up for the same reason. That trade is kind of done, okay? Cool. So let's go hunting. Okay. So if we are bullish, and remember, this is what we did last week. We were hoping that this would hold on the M2. We were hoping we would not make a drop on a weekly basis, but we did. Hope's not a strategy, right? But what's meaningful in here? Well, the meaningful thing is it did go from our sell zone to the target. So we know bears are involved. So we know that. Maybe it's not good for us, but we know that. And now the last sort of Alamo, if you will, our last line of defense, well, I guess it's not really the last, but then the major line of defense right now is this. Kickoff of the monthly pivot and hope there enough of the bears take profit here because they don't have the conviction. So if you're a bull, you're just hoping the bears are wrong on this one. And it was just a down week. It's hard to believe, but that's what you're looking at, right? And therefore your swing this week is going to be an up, a down, and an up, and work our way back up. And hopefully that gets us even further, hopefully by Thanksgiving, which is the week after next week, the very end of November. Hopefully we're up there. And if so, we probably have the strength and conviction to get this at least to the Fed meeting in December, right? Cool. If it drops from here, I'm not going to like it at all. I'm going to be very, very, very upset if it goes any further than this, because this is okay. I get it. I get it. Maybe we can drive it back up. But if it goes lower than that, I'm going to be very upset. Now, there's still this going on here. We can still buy at that monthly M2, but I'm telling you, I just don't like buying a series of lower lows and lower highs. I just don't like it at all, especially if we're already worried about this going into the middle of November, right? So that's going to be very upsetting if we go lower than where we are now. And also notice under current market conditions, this has no congruency with this. Okay. Now this is interesting. Normally I like to buy a confluence, like let's say like this, or like what we have now, another little confluence. The only way to make this a confluence is if this drops tomorrow hard and we're down here by the end of the weekend. You know what I mean? Because then these pivots are going to widen, right? Well, that is not going to make me feel better as a bull if this drops another bajillion pips tomorrow, right? It's going to be very, very significant. And I think if that actually occurred, it's going to be significant for everybody. And it might be like the August trade might be done. Maybe it's time to walk away from the portfolio. I hate even thinking about that. I hate even thinking about that. So I really want this to work to the upside, okay? But we realize we need to always remind ourselves what we want isn't necessarily what you're going to get. Now, what if you're a bear? You're feeling really good about this. Feeling really good about this. Bulls bought where we were supposed to buy the beginning of last week, right? 2 weeks ago, Bulls were supposed to buy that. And we were really happy to drag this up, right? That was fantastic. Where do we expect to be challenged? We know this is bulls. We know where to buy, and we know where our enemies lie in waiting. And we know it's right here, both monthly and weekly. We know they're there. So for them to take over like this is very disconcerting to me, especially if we know that it's coming. I don't know if it's going to be, middle of November or middle of December, but I know it's coming. I know where they're going to fight back. So to have that happen now is like, ooh, really? I mean, I'd much rather be up here this week, right? So I'm very, 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 very concerned. So hopefully we can get that. If you're a bear, you're taking this down and you're loving it. Okay. So let's back out a little bit and see if we got any other room for hope. Okay. This just seems like it just has to go up, right? I will not like it if we're down here. I will not like it one bit. Okay. Will not like it one bit. So you're right. Now we got to start setting this up. If we drop into a smaller time frame as a bull, we know this has to go up here, and maybe you start participating even on a 15-minute chart, right? Right? Remember, if nobody does it, it ain't going to go up. So we all have our own choices, right? And that's the cool thing. We're all making these choices, whether it's you or me or a bajillionaire hedge fund manager or whoever, right? All market participants are probably looking at this the same way. So that's why we need this to go up. Okay. Okay. So decide if you're going to participate or not. Let's open this up slightly. So let's look at the other pairs and see if we can find some congruency. Because remember, really, if we're a trend trader, we need all pairs to go up, or at least most pairs to go up. And if some pairs are going up and some are coming down, well, then we know some of the other pairs are not as macroly inclined. They're just not as bullish as we need them to be, so we won't go into those. What about this euro yen? Does this look okay to consider buying if you're a bull? Well, let's do this. Let's make sure we got a confluence of time frames here. Okay, there we go. We look all right on a monthly. Weekly, we're in a profit zone. Okay. And we have some price action, don't we? Somewhere in here. I would really like this to go up, especially if I'm buying CAD yen. I'd kind of like euro yen to go up too. And to get euro yen to go up, we kind of need US dollar to go down so that euro dollar is going up. So someone's buying euro, which also means if the dollar's weak, that's usually a sign of good macroeconomics, which means yen should be weak and everybody's happy on this one, right? So I need euro dollar to go up to get euro yen to go up, and that all makes sense, and hopefully it all works. So my swing trade now would look like this for next week, right? Gets us through one more week and kind of ends the current retracement. So we're using price action here in general. Oops, let's do it this way. In general, we're just using price action, right? So I'd rather buy it now than way down here. Now there could be a plan B. If it doesn't work well for us, maybe it's this. That's a lot less desirable. It's okay, and it's a little better than the CAD was. And the CAD was a little lower, but really don't want to go there. Yeah, well, what if you're bearish on this pair? Then that's fantastic. You're getting everything you want, right? So then your trade looks like this. But you also have to realize, okay, there's an issue with being a bear, and that this is support. So if you're a bear, you're worried that I'm going to come in and I'm going to go long for good reason, because I really wanted to, right? So bears don't have it easy, right? But what was the bearish trade plan? Well, there's your MM3, but then you're like, yeah, but I only have a quadruple top, right? Yeah, Wayne, but it only consolidated for an entire month. Yeah, but yeah, so you should be short up there, and a breach and a pullback would be ideal for you. Okay, because you can't sell at support, so you have to find your next resistance. You know, even a bear would like this, right? Bear would like that. That would be their plan B. Try again up top. That would likely happen near the end of the month or early in December and all that kind of stuff based around the Fed meeting. But we don't have that yet. So right now, next week's sell if you're a bear is this. And next week's trade if you're a bull is this, right? So if you're a bear, you need to sell a little higher. If you're a bull, you need to wake up and look for reversal patterns and try to take it to the upside. Capiche? Okay. It's not easy for everybody, or let's say anybody. How about this one, this beast? It hasn't fallen because people believe that there's a resolution coming for Brexit, and maybe pound was way oversold, or that just so many people made money on this move that we did back in August and September. Beautiful, right? Look at that third week of August. Pow, beautiful. Second chance, roll reversal, pow. Now we're way out elevated, right? And it's still bullish, but the yen is bullish too. So they're offsetting each other. So wouldn't this be an awesome indicator if this just popped up like this? We know the pound's strong right now. So all that would indicate is yen is strong. So what would happen to everything else? Everything else would stabilize or start to move up depending on their individual strength. If this drops down, that's not good if you're a bull. So how do you trade this using our swing trading methodology? And you have to recognize that there just may not be. So what type of trading, what style of trading is swing trading? I don't know if that's a clear question, but let's see if someone's got the right answer. What style? Yeah, it's trend trading. So what's the trend here for the last 2-3 weeks? Range, which is another way of just saying, well, it ain't bullish and it ain't bearish. So yeah, so is there a good swing trade here? No, not really. Okay, so remind yourself of your bias and then say, are these the market conditions for me to enter trades? If you're a bull, you look at this as a trending, you're like, no, not really. Okay. What if you're a bear? If you're a bear, you must sense the blood in the water, huh? There's blood in the water, isn't there? You can smell it. So bears might have a better entry, but it's not really a swing, is it? So nothing. There's just really nothing there. These are monthly pivots. These are weekly. The thing is, though, it can't be random, or I guess it could be, but um, like the fact that all of this is our monthly M3. I mean, right? So there's bears here. There's bears in these woods, right? Well, Jim says bears would anticipate it becoming a swing. We don't anticipate. Well, we do, but we don't, right? Like they could have the plan, but like notice, like let me zoom in a little bit. They can have the plan and they can try, but it's not really a swing yet. Okay. They might be range trading, anticipating a swing, but like R1, R1. Okay. Are those swing trades? What kind of market has an R1 and S1 in play? Range bound trade, range bound, right? So there's bears in these woods. I'm not contesting that. And they're trading, but it's not really swing trading. So what's happening is it came all the way down, then it went all the way up, 100% retracement, right? All the way down, all the way up, 90, right, at least a 786, all the way down, all the way up, again, 100% retracement, like all the way down again, and then what? It's still more likely to go up again than down. So it's not a swing trade. There are trades, don't get me wrong, but this isn't like the any kind of trade group. This is a swing trading group. Swing trading group is trend trading. What's the trend? There ain't no trend. But the fact that it's not collapsing just shows that both yen and pound are strong. So if it did move to the upside, that and I happen to be a bull, I'm going to love that. But that's confirmation bias. Now, if it's way up here in a week or so, I'm going to now it can kind of it's more of a confirmation than a hope. Okay. But right now, as far as I'm concerned, it's going to do this forever. And if it breaks to the downside, very, very bad for me. If it breaks to the upside, very, very good for me. Moving sideways, it's tradable, it's just not a swing. That's all, okay? Yeah, range forever, forever and ever. Cool. So mediocre, mediocre, okay. How about the Kiwi? All right, still profitable in the Kiwi. I'm in at 67. It's still at 69. So, you know, I still got a couple of 100 pips on this. It's not good, right? Gee whiz, right? Want to keep it above that. Let's change it so we have the same template every time. So currently we have a bottom here, M2, S1, M2. I'm not liking it. I have to remind myself I'm brave and I'm tough. USD Mexican peso. Are you swing trading that, or are you just doing the repatriation? I guess if you're building an exotics portfolio, yeah, I guess we could look at that. But like, I don't trade USD Mexican peso in the middle of the month. I could, but I don't. But okay. And also, in regards to Mexican peso, you're probably trading more dollar than anything, right? Let's face facts. The U.S. dollar is probably more important to the global market than the Mexican peso. But should we look at it? I guess so, unless I run out of steam. All right. But anyways, I remind myself I am brave. But gee whiz, I got to keep this above M2. I understand that even the central pivot's lower, and that's a buy for me, and M2 way down there, but I'm not going to feel good if this breaks below 69, right? I'm just not. I still have 68 and some change, maybe 68.50 or something, but I just don't want it. You know, psychologically, I might crack right there. Got to keep it above. But realistically, we got that going on, and this is good, and that's good, and all that kind of stuff. So this is really, again, and I'm trying to be as transparent, emotionally transparent as possible, so that you, A, understand that I don't have it all figured out. B, if you're feeling something similar, knowing how to deal with the emotion or the uncertainty keeps you alive in the long run. Okay? So if it did this, not going to be happy, but this is still valid. Okay. Right? That's still valid. When do I start truly cracking? Well, this is a valid trade too, but I don't want it to go from 69 to 68. So I might do the attitude of like, give me all my money at 68.80 or something, or give me my money back, like take all the money off the table. And then if it goes down here and it makes sense, maybe I try it again. Okay. But I have to start thinking like, I got 200 pips here. When do I take the 200 pips? Okay. Pips is pips. Remember, you can't eat pips. And our Aussie. Son of a gun. You son of a gun. Right? Pippin ain't easy. And that's why I think it says on my Skype message, it says, if the pips are rocking, don't come a knocking. Anyways, ciao. Son of a gun, stupid Aussie, way down there. So what I had highlighted earlier was the monthly buy zone, and we saw this open out of position. And that's what can happen. Isn't that interesting? Oh, any good funny reason the yen to be so strong? Well, we knew it was coming. Okay, Howard, we knew it was coming. I said, get ready to be nervous about the third week of November. And I gave stories of past times in my life where it was horrendous in November. And then other years, not a problem. It just has to do with when people take profit on these swing trades. Okay, and you got to understand, everyone's doing this except amateurs, right? Amateurs don't know to swing trade, but everyone's doing this. Every hedge fund manager on the planet is doing this. Like, it's a big deal. People get together on Wall Street and in the Hamptons and stuff, and they talk about their yen trades. All right, so it's kind of like a fight to get out when the timing's good, but it's not a secret to professionals. Okay, so in this case, it's a part of this seasonality. This is yen will get strong in November or December. Just that's it. And maybe it's beating your competitors to the exit first or something. There's some other issues going on too. Japan's GDP just came out. What was it? 0.1. Hey, well, at least we're growing. And I always laugh at that because are economists really that good where they can count every penny of productivity out of an economy to to know that to the 10th of 1% degree of accuracy? I'm like, there's no way. So just no way. And then the funny thing is, Germany just came out and surprised everyone and went up 0.1%. And they're like, yay. But anyways, when the Japanese economy is doing bad, the yen gets strong. It's very similar to how the US economy does bad and the dollar gets strong. Now, Japan is a very, very mature, very, very deep liquid market. Okay. And if you remember the 1980s, it was the center of the world, right? So, anyways, it's a telling sign. Also, Australia is a dog with fleas, right? We knew that as well. Aussie's a dog. So I think there's some yen strength here, right? And we're at points where I mean, honestly, on some of these yen pairs, we could see it. Things are way overbought, opened hot and all this kind of stuff, out of position trades. All of that means everything's overbought. So for them to come down, you're like, it's almost needed because we're bulls and we buy dips, so we need the dip, right? Dip, and you always suffer through these dips. So that's what happens. Then you got at least, instead of temporary, I'll use transitory yen strength. right? Transitory being Jay Powell. This is transitory Japanese yen strength on top of a currency that's a dog with fleas, which is Australia. Once again, they're an exporting nation and they import more than they export. It's kind of like saying, you know, you make $100,000 a year and spend $150,000 a year on your credit card. It ain't good. It's not sustainable, right? So Australia is in a world of hurt here. Hey, if we get a trade deal between China and the United States, this is hot to go, HOTTOGO. Just fix that problem, right? Because now China is making money again, and they're going to start, their economy will start improving again, and they're going to need all kinds of natural resources out of Australia. Okay, just like that. Boom, done. So that ain't happening right now. So this has come down the most. Aussie's getting crushed by a lot of different currencies. Okay, that's fine. So we're seeing that here as well. Anyone like to buy at S3? No. So this one, if you're a bull, stay out of the way. Okay, stay out of the way. Let it fall. You got better things to, I'd rather you prop up that CAD yen or the Euro yen or something like that than this. If you're a bear, well, the monthly sell, or sorry, the weekly sell was here, and you should have taken profit here. And if you didn't, you don't have discipline. Now you say, well, wait, it fell further. Yeah, well, how were you supposed to know that? How were you supposed to know that? And the only way you could have maybe made that decision, now it might have been the wrong decision, but you could have said, well, I'm treating this area here as all kind of one zone, and I'm treating that as an M3. So my plan is to go to M1. Yeah, okay. It's probably a wrong decision, but you got paid this time. Okay. But based on the weekly, this is your sell. There's your front run. There's your second chance. And there's your target. And you shouldn't be in this right now. If this had kicked beautifully off of this M3, I would have been very confident as a bear. I got my M3, I'm going to M1. This nonsense way up here does not make me confident. So really, this is luck. So if you sold here because of your alpha, you said, okay, we're rangy up here, and you're a bear, and you know the end's going to get strong sometime. Is it going to be the second week? Don't know. Is it going to be the third week? I don't know. Is it going to be the fourth week? Don't know. Is it the first week of December? Don't know. Is it the second week of December? Don't know. But you do know somewhere in that period, it will get strong. And by the way, this is what I've been teaching you. I don't know if this is the second, third, fourth week of November or the first or second week of December. Okay? And we also know out in January with certainty, we will be buying Japanese yen. So we got this window where with certainty, we will go from bears on the Japanese yen to bulls on the Japanese yen. We know it's coming, so you can make that decision. So you could have made this decision, the front run and all that kind of stuff. That's cool. But it's not a perfect entry on a monthly basis. It is on a weekly basis. And therefore, you should have been taking profit here because your assumption is bulls are going to come back because this may not be the move. So if you decide to just override that and let it run, you got lucky. Well, what happened? Bad Aussie news. It's not your yen buying here. You got lucky. And if you ignored that, it's a bad trade. Yes, you're making more money. That's not the point. Do this 1,000 times in a row. Most of the time, you'll give money back. That is what's important. Okay? So you're making money now. Congratulations. It was dumb. Right? Because in the long run, we're worried about you following the rules of engagement. Okay? So anyways, if you're a bear on that, great. Now, what about the next trade? Well, it's going to bounce somewhere, one would think. So maybe your next move is like that. If you don't get that move, then you have an OOP move, which means you use the 4-hour 21, and you're way a bajillion miles away from that. So you're going to have to wait 2 or 3 days for it to catch up. That's going to take patience. That's going to take discipline. If you don't have the patience and discipline, you're going to fail. You're just right. So if you're on this now, manage your stop appropriately. You did something stupid, but keep moving it. But right, so maybe you're here and then you moved it here, and then you moved it here, and so on and so forth. Let it run, but then have a plan to get out, and then have a new plan to get back in. That would be better. Now, here's a little trick. Hope you don't mind me throwing this little trick in. This is the bonus. Free bonus. If you go insert tool indicators, tools, I think it's under tools. Is that going to be the same as PSAR? Lime green. This, I don't think this is going to be right. It must be somewhere else, but let's make this logical. All right. So if this works, let's see. Yeah, okay, it's PSAR. Cool. All right. If you happen to be lucky and you're making more money than you expected because you're a bear, how do you get out of this situation properly? It's a legit question. Or maybe, right, you got lucky, like you just weren't watching those targets. You woke up one morning and you're like, whoops, I'm 50 pips past my target. What do? Right? How do you manage this situation? First of all, what time frame, like how accurate do you want to be? Do you want to use this 4-hour time frame, or do you want to use a 1-hour time frame? To answer that question, you have to know what this indicator is doing. This is a parabolic stop and reverse, which means you should stop. Doesn't mean you should reverse. It just means the market on this time frame is reversed. So each one of these dots is where your stop loss is right now. Now notice your stop loss is at 71.20, and we're at, sorry, 74.20, and we're at 73.40, right? Your stop is 80 pips away. You're like, oh, that's not very sensitive. But that's where it's suggesting based on this time frame and the volatility. So the idea here is when the market is falling fast, this indicator is going to move your stop very, very slowly. It wants to give it lots of room, okay? Which is kind of saying let the winners run. But as soon as you get into a period of consolidation, it moves the stop closer quickly. And it's the idea there is locking in your profit. So it's a combination of letting your winners run and then quickly locking in as much profits based on the volatility waning, okay? But still, you might say, whoa, 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 whoa. Okay? Whoa, 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 that's too far away. What if we do something like an hourly chart? Now our stop is at 37.70. It's using the same math, it's just measuring a smaller time frame, right? So now what it's saying is this is not, so 1 hour ago, or less than an hour ago, when I started this webinar 45 minutes ago, this was the candle, okay? This was the start of the candle. So what it's saying is based on what happened 44 minutes ago, our stop should be here, okay? So over the course of this hour, this has dropped like a ton of bricks. Nice. So the next move is coming in 15 minutes, and the next stop will probably be moved here. Like it moved, let's say, I don't know, 100 pips, and it locked in 15 more pips profit. You're like, it's nothing, right? But when it starts to consolidate, it'll move the stop more quickly to lock those in before it reverses, right? And at some point it will reverse. And when it does, the stop, this little black dot, will go from below the price because you're a bear. So, or sorry, above the price, you're a bear. So the stop's going to be up and you're making money on the way down. Once it consolidates and or reverses, this dot will be placed underneath. And it makes that determination because you got stopped out. Well, how do you get stopped out? Price comes up and touches the black dot. And when it does, it moves the black dot from below, or sorry, in this case, above to below. See how this plus the spread hit that? So it said, aha, your bearishness is over. So if you were trying to say, well, how do I stay patient and disciplined and not exit the trade out of emotions? How do I handle this? Use your parabolic stop and reverse. Okay. And if you're even more concerned, you're like, dude, Wayne, hourly candles, this thing's moving 100 pips. I don't want to give back 100 pips, right? I want to be more sensitive. Don't change the indicator, change the time frame. Okay? So on a 15-minute chart, when price plus spread, aka this red line, comes up and touches this, it's over. Because that's where your stop is. Your stop is currently here. Come on, there we go. Your stop is currently here. 15 minutes before that, it was here. 15 minutes before that, it's here. Okay? And that's telling you where your stop should be. And then just say, hey, man, I totally got lucky on it. I should have taken profit way up here. I really screwed up. But these are free pips. So how do I handle it intellectually instead of emotionally? Yeah, on the default settings, yeah, I didn't change anything. All I did was change the color from lime green, and I fattened up the dot. That's all I did, right? So on this indicator, you can go to indicators, parabolic. All I did was change the color from lime green so I can make it like funky red, and I changed the width so I can make it medium instead of fat, and that's the result. It's a stop loss, okay? It's a stop loss based on volatility. It's cool, right? It's trying. The cool part is it's trying to let your winners run. And then once they stop running, it's locking in profit as quickly as it can. So it's kind of nice. But it's a crutch. It's training wheels, okay? Cool. So, oh no, Euro yen went through. Oh, this is terrible. All right, go. Dang it. Let's look at Swissy. This means I'm going to have to work now on my trades, make tough decisions. That sounds terrible. All right, let's do some kitty CAD, CAD Swissy. Gee whiz, come on, market. This is bad. What did Trump just tweet something? Deal off with the Chinese or something? Oh, it's terrible. Oh, I'm going to miss my trades. It's so lonely. Powell. Yeah. Ah, man. Such hard work. All right. Let's do this. Let's go to an hourly. Right? Same as the yen trades, huh? M3 to M1. Isn't that nice? M3 to M1. So if anything, we can confirm what I'm teaching you in the swing trading group works. If you're a bear, there's your M3. What's your target? M1. Oh, what a coincidence. Okay. Where would bulls buy? Oh, bulls would buy here, and they did. What happened when it got to M3? Bears sold. Then there was a Thursday front run, Friday front run, market open sell, second chance sell, target. Beautiful. If you're a bear, right? If you're a bear, beautiful. Son of a gun. And now it went even lower than that. So yuck. So if you're a bear and you're going to try it again, this is what your next week looks like. Okay. There's your next week if you're a bear. If you're a bull, this sucks. So we need a giant rally. I mean, convincing. We need Powell and Trump both to prop the market up. Okay. The central banker and the president needs to get in here and stop this bleeding. And if so, you get a nice move like that. Like I need a convincing up because this, right? Let's put this extra boldy. Is this the bullish pattern you've been waiting for? No, it is not. Okay. No, it is not. And I better recognize. Shoot. So I'm okay with this coming down here, but this is supposed to go up now if you're a bull. Okay. Maybe it's just the testimony. Great. Okay. So let's survive the Powell testimony and see what happens. But I'm not liking this at all if I'm a bear, if I'm a bull. If I'm a bear, you're just riding the 21 on the, if you're trading in a smaller time frame, you're just riding that 21 down. But you got to recognize that you're below the target and you're out there on your own. You're floating around the ice flows, right? You're alone. It's very lonely if you're an Eskimo on the ice floes by yourself. Just you and the polar bears. Okay? Nowhere to go. Drifting aimlessly. Okay? So bears, up, 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 up. So you need some profit taking. So let's say it does something like this. Okay? Oops. If you're a bear, you're just assuming it's going to come down, it's going to ebb and flow, and you're going to sell like that. You could use the pivots, you could use psych levels, you could use price action. I love using price action and pivot points together. And so, because I love price action. Okay. I love price action. I trust price action. I love pivot points and I trust pivot points. So to get them to both agree like this, yeah, this goes up and it's this 75. Yeah, I'm going to dump it just below 75. Yep. But not until I get smaller time frame reversals to the downside. So I'll need some up before the next down. Okay. And we need to, at minimum, get above that if we're going to stay bullish. And there's hope. Like, I got hope, man. I got hope it does this, it does this, it does this, and then that changes everything for me. Okay. And then obviously we'd be on our way there. So this little move in here next week, ridiculously important. But more than just this CAD Swissy, like everything's got to do it, right? Pound Swissy. Let's keep the template. Okay. Pound Swissy, just like pound yen. Well, except it's made the lower low, but generally not up, but technically not bearish on the higher time frame. And by higher, I mean 4. I don't mean like philosophically, right? So we're still above that on the higher time frame. So why don't I mark that just for that? So that works out really nice. Price action and pivot points. Okay, so now I got to say, well, we're a bajillion miles away from that. The next confluence is this pivot and that pivot. So let's click in. Let's go to an hourly. Okay, perfect. So what does that mean for us? That means if you're a bear, you got permission to do this and all the way down to next week's M1. Oops. Delete, close. Next week's M1. And then what do bulls do at next week's M1? Sucks that it's a lower low. Okay. But let's add some data to that. Let's mark it. So is this a buy zone? Change the time frame again. Okay. This buy zone, which is next week's bearish target, is the central pivot. Bulls will live there. I don't know who's going to be buying back then or way out then, but technically it's in the textbook. Technically that could be it, but I'm worried it's too little too late, right? Especially if I've already gotten out of all my trades tomorrow or something like that, or on Monday, like, it doesn't matter none, I'm out, right? So yeah. So anyways, so there's some confluence there, but maybe too little too late. How about this Kiwi Swissy? Is this one helpful to us? Let's take a look. Once again, bulls and bears live on this trade. Bulls are buyers here, bears are sellers there. Somebody's right. We don't know which one. Both are terribly disappointed. We got this going on and this going on. Notice support pivot, resistance pivot, right? MS1, MR2. But that has to do with the function of the formula for pivot points. So you have to put that in there and say, oh, that's why these things work, because it's built in the math if you think about it. So I don't make a big deal of R1 and S1 because I'm a trend trader. So why would I care about your monthly R1 and monthly S1? You ever wonder that? Like everyone else seems to make a big deal of it, right? All the other gurus, like, oh, but it's because they don't know how to trade it. They've never actually traded it for long periods of time. So you would think S1 and R1 are important, but they're really not, because all it's telling you if you're trading off of that is you're stuck in a range. I care about trends. That's why, right? I'm self-taught and I'm like, I want to be a trend trader. I want to be in this a long time. Well, if you don't get to those levels, it's because it's trending. You should be breaching resistance if you're a bull. You don't care about resistance. You're like, what resistance? This market's bullish. Why would I care about it? Monthly R1, this is going up forever, right? That's why you're thinking more like R2, R1, right? And the same thing, S1, if it's obviously a bearish market, you're like, what do you mean you're pathetic little S1? Who cares? I'm destroying your S1. Hey, I might be worried around S2, but S1 don't mean nothing to me. It's because we're trend traders, right? So the only time those, right, they come into play is when you ain't going anywhere. That's the issue, right? And that's what they're telling you, because it's in the math on the calculations. What was the previous high? What was the previous low? Let's put that in as S1, R1. Well, if we're worried about those things, then we're not trending. So anyways, this is kind of saying, whoa, we ain't trending anymore. It's too bad. Okay. It's really too bad. Still would like this to go up. still wanted to go up. Okay. Let's do it this way. On the smaller time frame, we kind of got this going on and kind of like this going on, right? Yeah, it's not very interesting. But if I had to do anything, if I was a bull, could I buy off the central pivot if it allowed me to? Not just the central pivot. So let's go a little closer. Is there, like, if I was desperate to buy this, well, we know this is important, and we know this is important. And it seems to me on top of that, okay, those two pivots, and this is like some price action here, right? So I wouldn't sell. That's faux show. So maybe we can get a little upward move here. And then if I was a trend trader, right? If I was a trend trader, I might just jam my stop and just say it's going to break resistance and just let it go. Because I'm not, as a trend trader, I don't want to make 50 pips. I'm not interested in 50 pips. I would risk 50 pips to make 200, right? So if I got opportunity cost and this started moving up, I bought it on next week's M2, this month's central, on this price action, I definitely have the support. I'd move my stop and just say, all right, this is the sucker that breaks. Now, this would have cost me over the long period of time opportunity cost, but it just depends on what your strategy is, right? But we all know, and I think we can all agree, you cannot sell here. Okay. The only thing left for bears is next week, of course, and that gives them a very mediocre trade. Like, I thought in a range bound market, you're supposed to sell high. Is this high enough for you to get serious? I don't think so, right? Like, so I think there's more hope for bulls than bears, but I think what bears will do is something like that. And that'll just make me cry. I'll just sob. Just sob like my dog died or something. Okay. Do you scalp the range in the direction of your swing trade? Yeah, I can. It's not that I do. Like, there's never an always. There's always never. There's never an always. If I were going to, that's what I would do. But I don't trade against my bias. Think about it. If I did all my research and I have a conviction for my results, why would I bet against myself? It doesn't make any sense to me. Also, how do I take this out of my past? My past history has shown, good, right or wrong, doesn't matter, that there have been times in my life where I'm like, okay, I'm a bull, but I get it. This is short-term short. So I'm going to trade against it for a few days, but then I'm going to be like really solid conviction for my long-term analysis. And I think what happens is it starts out okay because I'm an experienced trader and I know how to enter and exit, and I can trade. I can pick up those 50 pips right here and there. But over the longer term of trading both ways, it chips away at my discipline. I don't know if it makes sense, but when I get in that mode where I do trade both ways, I'm like, okay, yeah, I'm a bull, but I can see this is coming down for the next 3 days. So I'm going to now sell. And so I sell for 2 or 3 days. And I mean like intraday trading, like, 25 trades a day kind of thing. I lose the discipline and I lose the focus, and it costs me more on the long run than I make on the short run. It's sort of a poison pill. Okay, you start going after the easier money, what you think is the easier money, the faster money. How about that? You start going after the faster money, and then you just lose focus on the big picture. And on the long run, I have not found it to be worth it. So if I'm a long-term bull because I've done hardcore analysis, then I'm a bull. Now I'm a bull in an up market, I'm a bull in a side market, and I don't like down markets at all. Okay. Wayne, I sold Kiwi Swissy off the weekly M3, monthly M3. Is it still, well, that's perfect. You're in profit now, but should I take profit? Depends on what your plan was. Was it a weekly plan? Was it a monthly plan? See, the targets are predefined. So there's no debate per se. Move your stop to lock, to remove your risk, hit your target, don't hit your target. Okay. MM1 is a top profit taking pivot. That's it. Okay. Now your analysis should show you if you should expect to go to S2 or not. But here's the thing, especially if you're not very good at making that determination, use the law of averages. I think most of the time, if you just got out at M1, first of all, you always have profit, right? Second of all, sometimes it goes down to S2. Most of the time, it does not go down to S2. What does it do? Just stop at M1? No, it usually, if it does go to S2, then it goes up, right? Which means some of the time you're going to make pips. Most of the time you're going to give away pips because you didn't get it at M1. Well, what if you averaged it out over the course of a year? They would offset each other. Like, let's say half the time it goes to S2, half the time it goes up, back up to M2. So at the end of the year, you just be better off removing the risk completely. Just take profit at M1, be done with it, right? So this individual trade, it might go further all the way down to S2, and you're like, oh, I should have stayed in. I knew it. And then, or it would bounce and go back up. You're like, oh, I should have taken profit. I knew it. Well, you don't know jack. So you're sitting on a pile of money. Take your money now. And at the end of the year, it doesn't make a difference what happened, except you spent less time in front of your charts, you spent less time worrying, you spent less time double guessing yourself, you spend more time with your children, you spend more time exercising, and you're certainly not drinking bourbon and smoking cigars. So like you're better off. You're so much healthier and wiser and better looking and taller because you just had the guts to get out at M1 like you should have been in the first place. Yeah, but the thing is, once you take your profit, it doesn't matter anymore. Don't look at that. By the way, this is why you have to have like 19 or 20 trades open, all at profit, because you don't give a damn about the one that's happening now. Like if you're at M1, get out. What do you care? Right? Or have a limit order there if you don't have the discipline to get out, but have the discipline to respect the plan. Okay? So if you're not in it, if you're already on, see, you're always should be on the next trade. So you're like, oh, it hits to M1. If you had a limit, you'd just be taken out. No decision-making process, no stress, right? You're not getting an ulcer over like, should I get out at M1? Should I get out at M1? You're just done. Like, and by the way, you're not even looking at that trade. You're on like 9 other trades and you're setting up the next trade. What are you doing tomorrow? What are you doing Monday? That's what you're thinking. You don't even see you get out at M1, but if you just got out at M1, what I'm saying is over the course of 100 trades like that, it doesn't make a difference what happens next. It just doesn't even matter. It's like it doesn't exist, right? If half the time it bounces and on half the time it goes through, well, if you just got out, it just doesn't matter. But you get all these other intangible benefits. Plus, you have this idea where you sold exactly where you knew to sell and you got out exactly where you knew to get out, and that's perfect. Maybe not a perfect result, but a perfect plan, and there's the discipline, right? And again, over the course of a year of doing this, it all works out to be the same, except now you're wasting less time and worrying less and all that. So you have to look at your trading as a career, not as a trade, okay? There's 1,000 million trades. None of them matter. Okay. Especially because you're not gambling. The ones that, if an individual trade mattered to you, it's because you're over leveraged. Or it's one of these things where since August, you've added 19 trades to that pound yen. And now you got 19 trades open and you see the pound yen's hesitating and you're like, no, what do I do? But you're not over leveraged because you have no risk. All your stops are at break even or better. Like you can only make money. So you're like, well, I can only make X amount of money or X times 3, right? X to the third time money. But either way, you can make money. Okay. You see what I mean? So just right. That's the right way of doing it. If it mattered because you put 30% of your account on one trade, then it's mattering for the wrong reason. It really, right? So every trade should not matter. You should not be married to a trade. None of your trades are important. None of your trades are genius. You're just doing a plan. And since you planned for it, think of it, the definition of a plan. You knew it was going to happen and it did it. So like, what are you, genius? No, I mean, it did the obvious. This is what we're trying to do, the obvious. And if it's not obvious, we don't do it, which means you only take good trades. And if you're wrong, something wacky happened in the market. You're like, well, I'm happy to get out of a wacky market I don't understand. Okay? To the edge, well, you got M1, right? And you got S2. You got M4, you got R2. Okay? So what I typically have said over the 100 years I've been teaching this, you always get out at R2 or S2. And that's based on the time frame of your trade plan. So if you're trading weekly, you always get out. If you're a weekly bear, you always get out of S2 100% of the time. And enough's enough, right? Now, when you get down to M1, now it's decision-making time. Okay. So you, depending on where you entered, like if you entered at the central pivot was the high of the week, then you should go for S2. If M3 was the high of the week, you should probably seriously consider getting out at that M1. Okay. Or is it July? You're lucky to trade down to M1. You're lucky to have that. Take the profit. Is it September? Massachusetts, weird. If it's if it's July, you're lucky. If it's September or October, I'm going big. I got big money in mind. All right, that kind of stuff. So that's all part of the process. Okay, cool. So a bunch of yen pairs, bunch of Swissy pairs. Thank you for your time again today, guys. I will I'll download the recording, I'll encode the recording, I'll upload the recording, and then I'll move the recording over to the site as quickly as possible. It usually takes 3 hours or something like that. So hey man, good luck with this week. I think you can see like it's decision making time, and I don't know any more than you. And if you're sweating bullets, yeah, welcome to the team. This is just how the world works. Welcome to the Forex, right? The water sometimes is cold and deep and swift. Okay, cool. And I can't wait to see next week. I can't wait to see what happens. So upward and onward. Take care, everybody. Stop sharing. Okay, and end. All right. Cheers. Peace.